You know what separates the wealthy from the wishful? It's not the trades they take. It's the money they make while everyone else is paralyzed by fear. A few days ago, as Bitcoin kissed our range low and whilst CryptoX started calling for sub 100k Bitcoin, I was setting up plans to profit multiple ways from the same market movement. A secondary income stream that works while we sleep, while others doubt and while many wait for the perfect moment that never comes. You see, here's the thing about wealth. It's built in the shadows of other people's uncertainty. While retail was asking, is this the bottom? I was already positioning for what comes next. Today, as the market starts to breathe again, I'm going to show you exactly how I've positioned myself since the recent pullback. Not just the pivot trades that I always talk about on this channel, but the strategy I use to capture every movement in between, especially on the trade entries that I wasn't able to catch. This is the one strategy that no one, and I mean no one, has ever shared publicly. The one I was planning to keep for my private masterclass, but you know, sometimes I'm nice, so I'm giving it to you publicly, and all I ask in return is a like for now and a comment by the end of this video to let me know if you got value from it. So if you've been one of those people who are waking up to buying opportunities you feel you missed, then this video is for you. Welcome back to Trade Travel Chill. I'm Annie, and you're about to learn something that will change how you think about making money in crypto forever. But first, let's get real for a second. There's no doubt that trading is your fastest way to build wealth if you take the time to learn, study, and deal with your emotional demons. But that's the biggest problem. Most people want to make money fast from trading, but that's the outcome of trading after years of practice. It's not the immediate result. Learning to trade takes commitment and especially patience. If you have both of those qualities, you have what it takes to make it eventually. But we don't live in a patient world anymore, and this is why most people give up on themselves before they have a chance to succeed. But what if there was a little motivation you could get along the way? Something that allowed you to make, say, side hustle money whilst you committed to your long-term learning journey. Because here's what I see happening every day in this space. People start their trading journey with fire. You know, they have this big passion, they have these dreams of financial freedom, but then the reality hits, the losses, the missed entries, the whole emotional roller coaster. And slowly that fire starts to dim, not because they can't do it, they absolutely can, but because they need to see progress while they're building their skills. In business, this is called a quick win, where you design a product that has to give some sort of immediate result to make people fall in love and commit to your product or your service. Now today, the market looks like it's starting to have a bit of a recovery after the recent pullback, and that means it's the perfect time to execute on our quick win. That's going to give us the motivation to keep building our trading skills while something else makes some fairly automated income. So if you just woke up to pivot lows and feel like you missed the entries already, then fear not, because I'm about to show you a way to profit regardless of missing the perfect entry without having to choose between FOMO and fear. And what I'm going to teach you is not just dependent on the current price action. You can use what I'm about to teach you in this video forever. And that's exactly what we're going to be diving into today. Now, as you know, I have a secondary trading strategy I use in addition to manual trading, which is my main income earner. And that second one is Gridbot trading. So as you can see here, the market dipped recently and I managed to pick up, you know, a lot of pretty good long entries right there. But here's the thing, and this is crucial, in crypto, everything tends to move together, right? Like this was Bitcoin's pivot low on the 1st of September. Ethereum also put in a low on the 1st of September. XRP 1st of September. Cardano also around the beginning of September. So you get the point, right? A lot of alts move with Bitcoin. Everything kind of moves at the same time, but you can't open trades on everything at the same time. Otherwise, it completely messes with your risk management. And if you try to trade every single move manually, you're going to overtrade, over leverage, and ultimately end up with too much risk in open trades. So now that the market has started to move away, it means that at this point in time, a range low is defined. And that means it's the perfect time to set up my secondary way of making money from markets, and that is GridBots. So my process is that my manual trades handle the big directional moves, the ones that require precision, timing, and a good market feel. But my GridBots handle everything in between. Every bounce, every retest, every little movement that most traders either miss or stress about. It's like having two income streams from the same market conditions. And today I'm going to show you exactly how I set up these shorter term bots. Now, what I'm about to show you, no one teaching Gridbot strategies has ever covered on the internet ever. This is my advanced strategy. It's not even advanced. You will be a pro by the end of this video, but you're about to hear it first before basically all the other channels start to steal the strategy. Now, liking, commenting, and sharing this video helps us to show more people where to get the information first. Now, before I show you exactly how to identify these setups, let me share the tool that makes this entire strategy possible. As I'll explain to you very soon, identifying high pockets of liquidity is a key part to this strategy, and for that, I rely on Hyblock. Now, here's what Hyblock does that's crucial for this strategy. It shows you where the real liquidity clusters are sitting in the market. Not just basic support and resistance levels that every trader can see, but the actual liquidation levels of every trader in open positions. And liquidity is the market maker's fuel, so we need to see this. Now, there are other forms of free software options out there, and I'm not going to tell you not to try them first, but here's the thing. I use a very particular setting in Hyblock called the relative liquidity setting. And I honestly can't say whether the free alternatives out there will give you the same precision in data that you need for this strategy to work effectively. So if you want to test this strategy with other free tools first, for sure do that. But if you find that you're not getting the clarity you need, or if you want to follow along with exactly what I'm using, I've arranged a 15% discount on Hyblock subscriptions for the Trade Travel Chill viewers. The link to get that discount is in the description below this video. But let's get into the actual strategy because that's what you're actually here for. So the first step before you even bother with charts is to know where you are in the cycle. It's a simple question to ask yourself, are we in a bull market or are we in a bear market? If we're in a bull market, you want to be opening long bots after significant pullbacks. If we're in a bear market, you want to be opening short bots after significant moves to the upside. So at the time of filming this video, we are in a bull market, or at least we all hope that we are still in a bull market. So I'm going to be looking at opening long bots because Bitcoin and also altcoins have recently had a fairly decent pullback. Now, I'm doing this on the 4-hour time frame, and the reason for that is because I want to reduce as much choppiness as possible, but I also want my bots to be trading in ranges where I'm going to be able to open and close bots on around about a monthly basis. So if I go out to the daily time frame, that means I could be holding my bot for months, and that's too long. I have a different strategy for that. This is more for active profit taking more regularly. So I'm going to stick to the 4-hour time frame for that. And then all I really need to do is zoom out a little bit and define my current range high and also my current range low. Now, this is where a normal person would stop, okay? They would define their range, they get the number at the bottom, they get the number at the top, they go to their platform, I'm using Pionex, and they would put that lowest range right here and the highest range right here. And that's about as much effort that they put into it. However, there is a way to better and more accurately define the range so that you can make sure that even if you get your range wrong, and let's just say the range low isn't in right now, which there is still a high chance that that's the actual case for Bitcoin at the time of filming this video, that if it does come lower, that the price doesn't end up outside of your range where it stops doing anything. And also, depending on the leverage level that you've chosen, you don't want to put yourself at risk of liquidation. So here's how I tweaked this to better define my range. Using Hyblock, as I described earlier, I use the heat map to define where the highest level of liquidity is above and below my current range. Now, in Hyblock, you can set different parameters like 1 month liquidity, 3 month, 1 week, etc. So I choose the 3 month, and then I change the setting to relative liquidity because relative shows me the liquidity that is there right now, whereas the other setting shows you all the liquidity over time. So once I can identify that from Hyblock, I just go and add it to my chart. And so what I can see now is that there is still a lot of liquidity below the current range down to about 105K. That's a significant level. And then above the range, we're sitting at about 130,600. So why do I care about that? I care about that because the market makers chase liquidity, right? So before they're going to make a move in one direction, they will wipe out the liquidity in the other direction first. Now, if I was to set my range just at this support level, for example, that I previously identified, and let's just say the market maker did decide to bring price down before eventually going up, then for a period of time, the bot's going to be outside of my range. Now, again, as long as the price moves outside of my range, but is still very, very far from my liquidation point, it's not a huge deal. However, that is buys that I could capture if I identified my range a lot better than just using support and resistance. The other thing too is when you understand liquidity, like I just explained to you, that the market maker will come for it before changing direction, that allows me to know also what leverage level I can choose, because instead of choosing a leverage level that's so high that I'll be liquidated just below my range, I can make sure I choose a leverage level that is well below this liquidity zone, knowing that that's going to be the first target of the market maker. And once they grab it, they likely won't send price lower. Or if for whatever reason they grabbed it and the price still looked bearish, I've made sure that my liquidation is so far below this zone that I can manually get out should I need to. And that's what it's all about, right? Is giving yourself enough room to be able to make your own decisions rather than just being a victim of getting liquidated. So far the process is pretty simple, right? 4-hour chart, support, resistance, use a heat map liquidity tool like Hyblock, or there's one on CoinGlass as well that's free. Define your range above and below price. So what's the next thing I need to do? Well, first of all, I need to actually think about where this liquidity is. Number one, we're in a bull market. Is it likely that we will come for this? Yes, if the bull market continues, it's likely we will come for that. Is it likely we will come for this? Well, that's when I have to think about what could send price down there. And that's when I need to add in the next element, which is knowing what news events are coming up over the next couple of weeks. Because remember, this is a 4-hour time frame and I'm planning to hold these for around about a month. So if I know what's coming up in the future, then I don't have to draw a conclusion as to what is going to happen. I don't need to guess. It's not about that. It's just about me knowing what is potentially coming up in the future, that if it turns out to be bad news, that bad news could be the thing that causes us to come for this liquidity next. I don't have to have an opinion myself, but I have to be aware of what is being spread on the internet right now. So what I do see is in the immediate future, for example, we have CPI and PPI this week. It's not as significant. I mean, it's significant. I shouldn't say that, but it's not as significant as the following week, which is going to be the FOMC, which is something that everybody is talking about right now. So if the FOMC does not come out with information that makes people bullish, then people could become extremely bearish, and that may cause the price to come down to this liquidity zone. If I didn't see that, then I might think that they've taken all the liquidity that they wanted when they moved down here, and they're never going to come for this region, and therefore I could ignore the region. But because I'm aware of upcoming news in a couple of weeks, I have to be open-minded to the fact that price may still come here. And if that's the case, I want to capture those lows. I want my bot to be buying in these lows, because once that liquidity gets taken and then price hopefully bounces from there, I'm going to end up making a lot more profits on my bots. So that means instead of having a range that most people would choose between support and resistance, I want to move my lower range below that liquidity zone. And then I want to move my upper range above the liquidity zone. And so now I have a much safer area. I'm going to be able to capture the downside in the worst case scenario. Whereas as a trader, for example, my trade would be entered here on the double bottom. Your stop loss would be under the lows, and you're hoping to ride that up till wherever is irrelevant. But on the presence of bad news, this trade could go like this, stop me out, and it will end up being a lost trade. But my bots will be buying when everyone's in peak fear. All right, so now that I've explained this strategy and how it works, let's actually go and put this into action. So I'm using Pionex, as you know, and I'm going to create the bot using this exact strategy. The other thing too that I should mention is price right now at the time of filming this is 112,900. The bottom of my zone of liquidity is 105. That's 7K away. So do I care about starting the bot now, or should I wait to see if it takes that first? No, that's the other difference. As a trader, I need to wait for price to get into my high zones of liquidity. When I'm trading Gridbots, if it's a long bot, I just want to be somewhere closer to the bottom half of the range than the top half, because that means I'm going to get more executions along the way. And therefore, because the price is currently currently closer to the bottom than it is to the top, I don't have to wait to see if it goes down there first. I don't have to try to time this perfectly. I can just set it up from now. And then as price does this, for example, if it ends up doing it, what will happen is every time it moves down, the grid will buy. Every time it moves up, the grid will sell and take that profit. Buy down, sell and take that profit. And it will just keep doing that all the way till it ends up right at the top of my range eventually. And this is why I don't need to be certain that the bottom is in before opening my bot, but by being aware of where the high zone of liquidity is, I can make sure that in the case of a bad news event, I'm going to be able to capitalize on that and I don't have to quickly run to the computer to open a trade. So with that in mind, now that the ranges are defined, it becomes very easy. I'm going to put my bottom range at 104,500 and then my top range at 131,500. I always start out with my grid quantity at 200 and then I just see if I need to adjust that. And how I will know that I need to adjust that is this profit grid fee right here. I want to get that to about 0.15, around that number, because that's going to give me, it's kind of like the sweet spot between how often the grid will trade, but then also fair fees for that profit. So basically just play around with that number until I can get close enough. So see here now it says the grid fee is 0.16. That's what I want. So I'm happy with that. Investment amount is whatever you're willing to put in. And then right here is where the leverage is. But I first want to check my liquidation price. Now, currently with my current settings, the liquidation is at 61,400. Now that's very, very far below my range. And I would manually exit well and truly before that, which means I can afford to go higher leverage to bring it a little bit closer to my 104 range. Still very clear of it, but a little bit closer because I've identified where the liquidity is and the fact that that's going to be the market maker's target. So if I change this to about, say, a 5x, we'll see where that puts it. Now it puts it at 78, which is still very far away. I don't tend to ever go higher than 7x. So let's try my highest, and that puts it at 86,820. Now what that means is that I've put in an investment of 2,000, but with the 7x leverage, my actual investment after leverage is 9,300. So I'm trading with more money than I've actually put on this bot. And I've made sure that I'm very far away from the liquidation level with enough time, should the absolute worst happen, enough time for me to manually exit this before any chance of getting liquidated. So once that's done, all I need to do is hit create and that bot is immediately created. Now, like I said to you earlier, I want to do this for the trades that I missed. I didn't miss a Bitcoin trade. However, there were a few here in my watch list that I was watching and didn't get entries on. So I want to go through some of them. And what I'm going to do is I'm going to quickly mark out the liquidation zones. I'm going to set them up as bots. And then so that you don't have to actually sit there and watch me do that, I'm going to put the links to all of the bots that I create on this video using this strategy in the description down below so that you can just directly copy them if you want to. So now that you see me using Pionex throughout this entire demo, there's a very specific reason that it's my platform of choice for Gridbot trading. Look, I could use any exchange for doing this. I literally have exchange accounts everywhere. I'm not even joking. But Pionex isn't just where I execute these Gridbot trades. It's where you can literally copy my exact bot setups, parameter by parameter. You don't really have to do all the guessing yourself. And like I said, I go through Hyblock with my specific settings. I decide the ranges and I set my own bots up using the exact strategy that I've shown you in this video. So here's the thing. When you sign up to Pionex using the link in the description of this video, you won't only get access to copy my bots if you want it, but you can also unlock my entire free Gridbot mastery course. Now, everything that you need to understand the mechanics, the risk management, the psychology of bot trading, you can learn all of that in under an hour with this course. I put this together on purpose for you because even though you can copy trade anyone's bots, doesn't have to be mine, you still need to operate the bot yourself. You still need to know how to make changes and keep updated with it and make your own decisions as to when to close it and all that kind of stuff. So all of this is included inside of this course and it's 100% free. All you need to do is create your Pionex account first using the link in the description of the video. Fund your account with a minimum 250 USDT. That is not the cost of the course. That's your money to use on Gridbots. Locate your UID, which if you watch this video on the website will show you exactly how to do that. And then once you have that, you can get access simply by clicking this button. Plus right now, Pionex has arranged some pretty incredible deposit bonuses that are only only available through that link. This is real money that gets added to your trading capital. You can use this just for signing up, and you can use it to copy and test out the Pionex platform. So once you've created your account and make a deposit, 100 USDT deposit gets you a futures grid bonus of 100 USDT, and this goes all the way to a 10,000 deposit getting you 1,000 USDT. Now, once you've made your deposit, just wait a little bit. It can take up to about 72 hours as the bonuses are distributed only on Tuesdays and Fridays. But here's the most important part. This isn't just about copying what I do. It's about understanding why I do it, because at the end of the day, these are your positions, your money, your business. So you need to know how to manage them. And that's why I created the course, so that you know exactly everything: when to close your bots, how to adjust parameters as market conditions change, and how to calculate proper position sizing. All the stuff that turns bot trading from gambling into a legitimate income stream, it's all in the course. So if you want to follow along with the exact setups that I have shared, grab the link in the description of the video, get educated first, and then you can go ahead and copy if that's what you want to do. So to make sure that we really have this strategy really cemented, I'm now going to take you through a few altcoins that I missed the trade on, but I'm going to be setting up the bots on using this exact strategy. So first, checking out Doge, which was the first one that I missed. As you can see here, I defined my 4-hour range, and I've defined the liquidity above and below price. Now, Doge is a little bit too close to the top of the range for me than the bottom of the range. So what I can actually do with this one is set up a trigger price, which I'll show you very quickly how to do it. First thing is, I'm going to make sure my range is below this liquidation zone right here, and I'm going to put the upper range above this liquidation zone right here. So once I've entered everything, I just need to decide where do I want this bot to actually trigger. And I think I would prefer if price came back to retest this area right here. So I'm going to put my trigger price at around this level. So what you'll see down here in the settings, if there's an option for a trigger price, which means the bot won't actually start unless price comes back to that level. So all I need to do is enter that number there, click on create, and now you'll see that the bot is there, it's ready to go, but the profit shows empty because it hasn't triggered yet. If I change my mind on that, I can just click stop and exit that bot before it even opens. The next trade that I missed was Injective. We've got two really large zones of liquidity above and below price. So my low range is going to go under this zone at about 9.7, and my top range will go at about 18.1. For DOT, we have a similar situation. Again, it's broken out, so I may do a trigger price on this one as well, somewhere in the middle of this range right here. But the bottom end of my range is going to be about 3.34, and the top of my range will be about 4.7. Now, could these break out and do a lot more? Yeah, they could, but that's what trading is for. I'm not trying to do that. I'm trying to capture as much profit whilst it's going sideways like this within my defined range. The next one was Ondo, which has really a lot of liquidity, to be honest with you. So the range is quite large on this. It's not ideal for my 1 month type of strategy. It's okay for a long-term bot, and I will give it a chance anyway, but I will monitor this one closely, as it may not actually turn out to make me enough profit, simply because I have to have my range so wide because there is a huge zone of liquidity below price on this one. So the bottom of my range will be about 0.6725 and the top will be 0.127. I'm telling you these numbers because if you know how to set up Gridbots, or even if you don't and you do the course, you could literally go back and listen to these numbers if you happen to be watching this video at the time that I've released it, and you can put them in and you don't even have to copy me, but you can if you want. It's completely up to you. The next one is XLM, and XLM is in a really nice spot in the lower end of the range. So I'm going to put the lower end of the range under this zone here at 0.31 and the upper end of the range at about 0.53. And then the last one I had was Algo, also in a really good position for a bot as well. I'm going to put the lower range at 0.193 and the upper range at about 0.34. All right, so now you've seen the strategy in action, you understand the logic behind it. So let's talk about how you can actually copy what I'm doing if that's what you want to do. First of all, as I mentioned earlier, you need to join Pionex using the link in the description of this video. If you already have a Pionex account, I do have limited public bots that you can still copy, but of course, people who choose to support the channel by using our links do get the highest value That's fair. Therefore, they get access to a lot more bots. Now, once you have your account, look for the section called Copy My Bots. It's in the description of this video. That's going to give you access to all of my bot links. But there is something crucial that most people don't think about. Markets change, ranges break, and new opportunities are emerging all the time. So I am constantly adjusting my bots, closing some, opening others, modifying parameters as the conditions evolve. So the third step, and this one is really important, is to join my Discord community, because that is where I post the real-time updates about changes that I make to my bots, new ones that I add, and most importantly, when I close my own bots. Because here's the thing I need you to understand. I'm not trying to run these bots on this particular strategy. I'm not trying to run them once price breaks out of those ranges. That's for trading. I'm not looking for these ones to turn into long-term positions. I'm just trying to make money whilst the bots are within my defined range. So once they break out and start to run a trend, my pivot low entries that I got from manual trading, those take over and those make me the real money. The bot's job at that point is done. After the new trend exhausts, I'll wait again for a fresh range to be defined, identify the new liquidity clusters, and then go ahead and set up new bots. So it's kind of like a ping pong strategy. I'm bouncing from manual trading in optimal conditions to Gridbot trading when we have these nice, big, wide 4-hour ranges after liquidity wipeouts. So let me paint you the complete picture of how this all works together. Manual trading is for optimal conditions, those perfect pivot setups that I'm always chasing on this channel, high conviction directional plays where precision matters and the risk to reward is exceptional. That's always my bread and butter. That's my jam. But Gridbot trading is for range bound periods when the markets are consolidating, when everything's moving sideways, when you expect after a pivot low, it's going to go to a range high, when most traders are sitting on their hands waiting for clarity or FOMC. You know, you can get to set up bots in that condition. It's a constant transition between strategies. So I call it the ping pong approach, that it keeps you making money regardless of what the market is doing. So whilst everybody's complaining about boring sideways action or waiting for the next setup, you're literally getting paid for the market's indecision essentially. Now, I told you at the beginning of this video, no one on the internet has ever showed you this approach, how to use liquidity to define accurate ranges instead of just guessing support and resistance. Then it goes out of your range and then you've missed out on like extra Gridbot profits. So this is how you build real consistent wealth in crypto. It's not by looking for home runs every single trade, but by having multiple income streams from the same market conditions. Market gives you opportunities every single day. Most people just don't see them. And there it is, the strategy that no one else on the internet has shown you. But here's the thing, and listen carefully. Gridbot trading isn't set and forget. These are your business operations and you need to understand every aspect before you copy anyone's setup, including mine. And so that is why I created the free Gridbot Mastery course that I mentioned. Everything you need to know in under an hour. Like I said, link in the description. And I mean it when I say get educated first. Now, if you want to go deeper than that, if you want to learn to trade the way we do here on this channel and you want live trading sessions and updates, or to be in a community of people who actively trade, that's what a Trade Travel Chill membership is for. So you can also learn more about that. Everything's detailed in the description of this video. So there you go. I promised you that I would take you from beginner Gridbot trader to pro in one video. You literally have the secret tool to be able to define the best ranges for regular Gridbot trading. So let me know in the comments below, are you going to try this strategy?